Prime Focus, a stock which has been in focus of late. Actually, in the month of November, you've seen the stock declining nearly 30%, and the reason can be attributed to its UK subsidiary, that's DNEG, deciding to postpone its IPO due to market uncertainty. Let's discuss this with Nishant Fadia of Prime Focus, who joins us on the phone line. Hi, Nishant. Good afternoon, and thanks a lot for joining us on BloombergQuint. What was the main reason? I know you guys have highlighted in the press release that due to market uncertainty, the IPO has been delayed. But any timelines when the street can see recommencing of this IPO? What sort of money was the subsidiary looking to raise here?
Hi. Thanks for having me. So, we were out to raise about $250 million. But unfortunately, like you mentioned, we couldn't get past sort of finish line, and we had to postpone the IPO. I think it was largely due to the fact that the market was generally soft at that time. Saudi Aramco was also just happening, and I think generally just people were a little spooked, so we just decided to push that ahead.
Timeline when we can see the recommencement of the IPO process?
So, so far it's only been a week or 10 days since this has happened. So we'll probably take a call on that early next year on when a good time is, obviously in consultation with all the relevant with the banks and our stakeholders, etc.
Nishant, the other overhang, I guess, which has been there on the stock is the debt which is sitting on the books. If you could just highlight what's the debt now that the company has, what is the debt reduction plan, and what sort of cost of borrowing which is there? Has it gone down with the interest rates falling?
Yeah, so we have about 2,600 crores of debt on a group basis. Our average cost of borrowing is about 8 to 9%. And a large part of this is obviously in the DNEG subsidiary, so it's dollar denominated, so it's at a fairly lower cost, but the blended cost is about between 8 and 9%.
Which DNEG was supposed to raise was going towards reduction of debt, is it?
Yes, that was the primary agenda to de-lever the group, and that continues to be the focus going ahead as well.
Also means that debt reduction plans have been kept on hold with the IPO being postponed.
Yeah, so we are still, obviously discussing other ways and means, and we've always said that, it is a priority to delever the group. An IPO was obviously one of the main sort of ways in which we thought we could do that. And although it's been postponed, we still look forward and, and work on other sort of opportunities where we can sort of reduce this debt, essentially via unlocking of value in our subsidiaries.
Okay. Nishant, I was just looking at the financials too. I think in FY18 and FY19, you guys have posted a loss. In first half of this financial year also, loss of almost 40 to 45 crore has been posted. When can we see the company turning profitable? Is it in the near future or will it take more time?
So I think, from an EBITDA perspective, which is the metric we use internally, things are quite good, in fact. We've in order book also is robust. We are working on the next Fast and Furious, that's Fast and Furious 9, the next James Bond, the next Wonder Woman. So from an order book and business perspective, we are good. Obviously, there's interest and depreciation, which at the bottom line level, which impacts the numbers, and a lot of other non-cash charges like ESOP, etc. So I think we track EBITDA closely, and we are quite confident of the way the business is moving and the order book is panning out.
So then tell us at EBITDA level, what sort of growth can one expect?
So we did, we'll see. We don't give a particular guidance, but we did about 550 crores of EBITDA last year, and we'll certainly grow from that this year.
Any ballpark figure, any growth number that you can share with us? Internal estimates?
Not really, but there'll certainly be growth.
Okay, fair enough. Wish you all the best, Nishant, and thanks a lot for joining us. That's the management of Prime Focus.
Thanks for having me.
of late has been under pressure because their UK subsidiary, which has majority of its debt, they postponed their IPO process. They were looking to raise about $215 million, and as Nishant highlighted, the debt is almost 2,000 crore. At EBITDA level, they're doing good, but it's the bottom line. A lot of interest cost has been eating into that, and the stock too has been suffering because of higher debt, which is sitting on the books. The stock has been correcting. At least I think even this calendar year, we've not seen any major growth coming by in terms of stock price.